Good day, fellow investors. We always say how investing is about finding great businesses and then, of course, putting your money into them. And that's exactly what I'm going to give you today, a great business. Adyen, a Dutch company that is really growing fast and has a very, very strong moat. It's also owned by Cathie Wood. It's a payment platform that, let's say, comprehends all the payments that one can think about and offers that service to global merchants so that they can sell also, let's say, with a local payment system around the world. So it's really catering to the needs that you can have as a merchant, and therefore it's growing fast. We're going to discuss the stock price, we're going to make a business overview, the financials, we're going to make a stock valuations using our template that you can always download for free in the link in the description below, and then we're going to conclude with an investment thesis so that you can see whether this is something to put into your portfolio or not. If you enjoyed this video, if you enjoyed the investing perspective we offer here, please click that like button to support the channel, and if you haven't, please consider subscribing. Let's start with the stock price. It's a pretty recent IPO. It went public in 2018. And of course, given that it's a great business, great businesses don't wait long for investors, but it really exploded after the COVID crisis when more and more merchants, when the tech revolution really got its speed. So we are now a little bit lower than the highs. The market capitalization is 56 billion euros, so still not huge compared to other technological companies, and therefore interesting. What do they do as a business? They give one platform and one contract for your global and local payment methods. So really simplify everything for a merchant. So for example, if you want to buy my stock market research platform, for now there is only PayPal or a card method. I think also the fee there that I have to pay to those processors is pretty steep, especially the card payments. So if I would have Adyen, you could pay also with your local payment system and they would simply do everything for me. So that also indicates that the platform that I use, which is Teachable, might also switch to such a provider, make everything smoother, easier, and of course, if there is less friction, then sales are also easier. So very, very interesting, and I think there is plenty of room to grow, and also the management is saying that they will grow around 30% over the midterm. So those are pretty big numbers and good numbers for a growth stock, and as we say, there is room for growth. Don't forget to check the platform. The price is going up end of month, so you can lock in your price forever. What do? They give online payments, points of sale platforms, e-commerce, issuing, whatever a merchant needs, online merchant, but also they scale into combining all the payments, all the system that one has. And given the quality of the business, given the quality of the one platform that they are putting everything into, growth is really staggering, and especially has been growing very, very fast in North America, especially last year. Europe, still good growth. Asia Pacific starting there, and Latin America also. So globally present, scaling potential, and also they can reach huge growth as these markets, we can say, are not even close to penetrated as Europe. Volumes up 27%, revenue up 28%, EBITDA up 27%, and this is very important because when you have business growth, revenue growth, and EBITDA growth all in line, it means that the business model is profitable, sustainable, and scalable. There are many businesses that just grow, but so do their losses, so does their cash burn. Just grow. That's easy to grow like that. Adyen grows sustainably and, most importantly, profitably. Net income for 2020 was 261 million, up just 11%, but there were some derivative liabilities as a consequence of Adyen's share price increases. Then I just quickly went to look what is that, and they have a merchant agreement with eBay, And as Adyen's stock price goes up 5%, then their liability towards eBay goes up 2 million. So if it goes 50%, then their liability goes up 20 million. So I'm sure you would not mind seeing the price going up another 50% and then the company have a cost of 20 million. So that's not such a big issue. And if we look at the objectives, and that's always nice, if you look for investments, always look for what the management is saying. Often just they tell you everything in their presentation, all you need to know. So we are still in an early stage of building the company. They expect higher EBITDA margins going onward and growth of mid-20s, low 30s in the medium term by executing their sales strategy. For valuing the stock, I've decided to use earnings, as cash flows are also really high, but really also coming from working capital, as they get the money from you as a customer and then they have to give it a little bit later to their clients. So there is a lot of cash accumulation there, but I'll stick to earnings for valuation. Now let's take our template and do the valuation. So don't forget that you can download this. I turned it around, so put the most recent that I've done on top, and the other ones you can just scroll down and you can see what are the interesting stocks you might be interested. Here you have the research, so don't forget to click on that. And if you click here, you go to the valuation page. As I said, earnings per share, I have deleted here the present values of the earnings because they are reinvesting those earnings into growth. I have put the 30% growth rate over the next 5 years, then let's assume 20%, a discount rate of 10, and terminal multiple here. This is the game and you'll see how the game changes. If I put a terminal multiple of 20 in 2030, then the present value of the company is 512. If we compare it to the current stock price, of course, my present value is, let's say, ridiculously conservative. If I change the terminal multiple to 30, then the present value goes to 1000 and increase the growth rate. However, if I put the current price-earnings ratio, the current price-earnings ratio is around 200. So then, of course, if they keep growing at 30%, the present value for a 10% expected return, thus the discount rate used, is 7,000 per share. So there is a lot of upside, but then the terminal multiple has to stay, the PE ratio has to stay, which is very, very unlikely. If we put a terminal multiple of 50 in 2030 on 2029 earnings that we have in 2030, then the present value justifies this stock price. And this is the issue also with these great businesses, fast growers, that have a high price-earnings ratio. Price-earnings ratio of 200, 250, 500 with some stocks means that the company needs to grow their earnings extremely fast for a long period of time, and then also keep a high valuation, an exuberant valuation. That's something that usually changes. We have seen Apple had a P ratio of 10 in 2016, and as the growth slows down, so does the valuation go down. It's called the delta of the delta tool. I made the example on Visa, a video, so you can check that. And you can see how if the growth slows down, so does the expected valuation that now we might call exuberant also slow down, despite the great businesses. And this Adyen Stock Analysis reminds me of Peter Lynch. He discusses the price-earnings ratio, which is a video I'll make soon. So also check my free stock market course, where we made also about 8 chapters of summaries of this book. And he says that in 1970 there was this great growth stock called electronic data systems. The stock price was 40, and by 1974 the stock price went to 3. But the company was doing great over those years, no matter that the stock went from 40 to 3. And Adyen will likely do great. It's a great business, it's a great business model, it's a great opportunity, it's a great market for them. However, the price-earnings ratio current of 200 and something really puts a great risk onto investing in this company, because it estimates, yes, fast growth ahead, but then it estimates that the market will still see the company as an exuberant growth company 10 years down the road. That's possible, but at some point you need your dividends, you need your profits, and you're looking at that price earnings ratio at some point. So I hope you have enjoyed this. I'm going through all the Dutch companies, so I'll make a few more videos about Dutch companies. Subscribe for that. Check my stock market research platform where I share all my research. See if it fits you, because as I said, I'm soon increasing the price and you can lock that in forever. Thanks for watching. I'll see you in the next video.